Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, it's Daniel Snyder from Seeking Alpha. Now, sometimes you wonder how ETFs get created, and that's why I am so thrilled today to bring in Joy Yang, head of index product management at MarketVector Indices, who's going to help us understand a little bit about these indices that are behind ETFs and their benchmarks that they're tracking. So Joy, thank you so much for taking the time today.
Thank you.
So I want to get started. Obviously, MarketVector, you're huge in the space. I believe it's 54 billion plus in investment products globally. So you've got your eyes on a lot of trends going on in the market right now. So 2025, kind of wondering, what are you seeing with ETF allocations and products that are being created?
I think first and foremost, everyone's acknowledging that we're in the midst of unprecedented macro risks. And this means that price can be dislocated from valuation for extended periods of time. So I think investors really need to ask themselves, is it different this time? And if it is, what can I do about it? And then where can I invest? And that's where indexes can really help investors kind of go through these series of questions. So is it different this time? Yes, it is. We haven't seen these types of macro or self-inflicted macro risks before. And we're seeing equities, bonds, and cash all fall down together. So correlations are broken. In addition, we're seeing this trust in American exceptionalism breakdown. So this is absolutely different. So what can investors do about it? Well, so we go back to look at the rich history we have with indexes, and we can give a sense of how markets perform over different types of macro risk, because every macro risk is different. And looking back at drawdowns, we can see that sharp drawdowns are usually followed by sharp upturns. So I think it's key for investors to understand that you need to stay invested because timing the markets is difficult. And if you're out of the market, you're going to lose out on the sharp rebounds. So that's one aspect to keep in mind and perspective on. So with this, where can investors invest? Or it's really about answering the question of, what is your risk tolerance? And then what's your liquidity needs? So looking at those two questions, if you can't sleep at night, or if you really need that fancy sports car, then I think the key is to think about diversification. So go beyond equities, fixed income, and cash. And we're looking at gold at the moment. Gold is at historic highs. And it's accelerating. So, we think there's a strong case for that momentum to sustain because we're seeing structural shifts with central bank buying coming into play. Gold at the end of the day is still a real world asset. So, there could be risks around custody or just, transferring gold across the world. So we also look at Bitcoin, which is also rising to all-time highs again. And again, here's an asset class that's also seeing structural shifts because it's getting institutional quality back. It's seeing regulatory clarity. So we're seeing it go from this speculative fintech type of asset to shining around being a store of value, because at the end of the day, it has immutability. It's independent from any single government, but also its trust is built into the code. So I think these are two types of alternative asset classes that we're tracking through our indexes. And also, I think the other aspect that we, really want investors to focus on is that you still need to look at long-term fundamental valuation. And I think, right now we're in fear mode and previously we were in greed mode. So, you know, a lot of assets got high on momentum, and there's still good cheap valuation out there, whether that's international markets or assets linked to gold or assets that are relatively cheap to US markets. So there's still a lot of opportunities out there. And there's a lot of structural opportunities because, if you look at AI, that's a real story. Innovation will continue. And I think innovation, whether it's semiconductors or through quantum computing, that's real, opportunities that investors should still be looking at that focused on the long term and not really kind of the short term headline noise. In addition, governments are spending and defense is one area that we're seeing increased fiscal spending, increased fiscal stimulus. And we know that government spending is going to be big and it's going to be long. So that's another area. And we've seen flows into defense ETFs at all-time highs year to date. So these are kind of like the three areas that we're focused on.
Yeah. I mean, we just covered a lot of themes right there. You talked about gold, you talked about crypto, you talked about AI, defense. I mean, there's other emerging markets, for example, right? So for when you go and look at these themes, how does MarketVector then go in and say, okay, well, this is how we're going to put an indice together? Can you share any insights there?
I think when you're looking at things, you're really looking at disruptive innovation. So it's like sectors and names we haven't really seen before. And that means we don't have a lot of the historic data to really understand how they're moving. So we really have to start from top down basic principles, which are, understand what the top down drivers are. You really need to think about, is this a structural shift or is it a short-term fad? And so that requires deep research. So we rely on our research team really to go down and understand, the kind of disruption in this space and how they're going to play out. And more importantly, I think we understand that it's important to pass this information back to the investors because the more they understand the theme and how it plays, the more confidence they can be in investing in that thing. And then the second aspect is, you need to have the broadest opportunity set. So when you're looking at themes, it's really important to understand, the whole ecosystem as well as the global opportunity, because we've seen with AI that, innovation doesn't just come from the US, it can come from anywhere, including China or even Vietnam. So it's really to expand your opportunity set and then to think about rigorous classification. And that classification we know will evolve. So it's hard to look at these backward-looking sector classification because they're built on kind of this historic business model. And we know that, forward-looking classifications really require an understanding of how these themes evolve. So it's constant monitoring of, what aspects of the themes are growing or shifting. And then at the end of the day, we're also designing something that's fit for purpose, meaning indexes can be used to underlie an investable product, such as an ETF, or it can be used to track the things, such as a benchmark or a reference price. So those two have very different qualities on the trade-offs we're making, behind, whether to think about costs or whether to think about how we're tracking the growth and the evolution in that space. And one area that may be a clear example of this is digital assets. It's a growing asset place. You may want to track the top 100 digital assets by market cap, but they're not investable. So when you're thinking about designing an investable digital asset product, you're really trying to incorporate all the aspects about quality, data, and transparent information.
So maybe we can dive into one of the indices specifically. So for example, the AI boom, it's undeniable. People are still flocking to it in droves and wondering what's the next big company, what's the next big investment for the AI space for my portfolio. So you have the NVIS US listed Semiconductor 25 index. Just kind of wondering if, I know maybe you can talk about, there's a 20% cap per company in the index. It's a pure play semiconductor firm. Semiconductor firms, excuse me. Just kind of wondering, how does this provide investors targeted access to that space compared to a different product?
That's a great example of, what it takes to make trade-offs in index design. So our 25 top semiconductors is focused on pure play. So companies that have a majority of their revenues focused on semiconductors, because some businesses can operate between semiconductors and other types of technology. And it's capped at 20% because it needs to meet US regulations around caps around 25%. But, so that's kind of built for a US investor perspective, but we have global investors around the world interested in our indexes trying to also capture the same exposures. So we also have a version of that that's capped at 10% because in Europe, you have a tighter cap from a regulatory perspective. So those are, when we talk about trade-offs on investability, you really need to consider the jurisdiction of where the ETF is being sold.
So I love to transition real fast, talking about the funds that work with you. I mean, you have so many indices and you've been in this game for so long. So what is it about the design features when you go and create these indexes for it just to be ETF ready, to be ETF easy for these fund managers to go, yes, we want to go with MarketVector?
So again, that's another area that we specifically work with our clients to collaborate with them on what does it mean for them to be ETF ready, because they're obviously trying to solve a very specific investment goal for their clients that meet their differentiated value. So we're designing an index that really puts a spotlight on our clients' value and bring that specific ETF to market. And maybe, something that fits within a wider product lineup, or maybe something that they're specifically trying to promote in that one space. So it requires a lot of collaborative, iterative work with the client, but again, also working in what they consider investable, what they consider their trading constraints or their investability constraints, which may take into sanctions or regulatory constraints. And that's also an ongoing collaboration, because as things evolve or as their product lineup evolve or their target market evolves, we're trying to make sure those indexes are evolving alongside with, that ETF product that they're trying to bring to market.
And you offer a ton of tools, right? Whether it's cap or screens or sector balances across all your indices. So how do these features protect investors from overexposure while still capturing these high conviction themes that everybody's trying to chase out in the markets?
Yeah, so I think, everybody wants to do better than the market. And to do that, you have to be, focused, a little bit more focused, or you have to have an opinion on, what are some of the opportunities as well as risks. So it's all a trade-off and it's a balance. And that's where we come in and we're trying to either help clients understand kind of the trade-offs that we've seen in the markets over decades of experience in either managing products or ETFs or in designing ETFs.
Yeah, one thing that comes to mind more recently at the beginning of this year was quantum computing. When that took off and everybody started trying to chase, well, what ETFs are out there and who are these companies? And there didn't seem to be a ton of them. So I imagine there is that concentration risk as you're talking about there. So really it sounds like when people come to MarketVector, they're getting the research, they're getting the decades of experience, and then you help guide them as they're creating the product to help their end client, correct?
Yeah, so it's the research, but it's also kind of behind the background is our operations team, and so they're actually going through thousands of data points, and you can use technology to help you, but sometimes, you need that human intelligence to understand it is something different this time.
Now, at MarketVector, you ride a lot of different currents through all these different themes, and you've been doing it for decades, right? So just kind of want to wrap things up here. Being so into the weeds, are there any themes? Is there anything new that you're kind of seeing from your clients maybe coming into you, say, hey, do you have anything for this theme? Do you have an index built for this? Any insight there that you might be able to share with our audience that is looking for what might be the next media capture theme that they're looking to invest in?
Well, I think the definition of these kind of disruption is that we haven't seen it before, right? So I think we look at, and we're tracking now, for us, the biggest themes is around the disruption that technology and data has in the industry, and it's going to impact all industry, whether it's through artificial intelligence or through blockchain. So, we're looking at the digital asset space. And there are many uses in digital assets. They're not all meme coins. They're not all store of value. We're kind of track and classify, what are the emerging use cases that are coming out of this space. And we kind of, are very excited about monitoring it, not only providing people the benchmarks or reference prices, but also investable solutions. And we think there are more and more investable solutions as we get regulation clarity in this space.
All right, Joy, let's go ahead and leave it there. Thank you so much for taking the time to join us today for this episode. Joy Yang, everybody from MarketVector Indices. She is the head of index product management. Feel free to go reach out to her on LinkedIn, Twitter, anywhere else. Thank you so much once again. And everybody, that's been this week's episode of ETF Spotlight. We'll see you again here next week.